Hey guys, let me check if this is recording properly. Yes, it seems to be. Okay, so this won't be a long video. I didn't trade this week. There weren't many good opportunities. I'm gonna try to at least try to take only very high probability setups here from now on. It's not a guarantee though. I love trying to get in those anticipation trades right at the rotation spots, like there, but that it's more risky, it's risky. We are jumping in front of a train, right? So we need to have clues. This is more advanced stuff, trying to do that. And you always end up losing more money when trying to do that. But when you get them, you make up for the losses. Anyways, um, before doing that, I just want to address some questions. Some people who purchased the indicator, sorry, there at the MQL5 community market, they always ask me the same question, like how do I use, where do I enter, how do I use this, this indicator properly, even though I point them to the ATS channel to watch the videos. And because guys, this isn't is really it is a simple concept, right? And this, even though it's simple, it's not does not mean it's easy. Okay, do not mistake simple with easy. And look guys, this isn't a buy and sell generator. Okay, this is like this concept here, this tool, it is just a technical analysis tool. Okay, it's just telling you if price is above or below value. So it gives you a general area of, okay, this area, it has a higher probability of working out for a sell if you are selling above value, and if the higher time frame is no trending down. That's it. Now, where do you enter? Where do exactly do I enter? I wish I knew too. If we knew that, we would all be billionaires by now, right? uh, so look, what I've been thinking about here in the last couple of days, guys, for you, especially for you, you want to know, how do I know for sure? First of all, you never know for sure. Okay, when something is going to happen, we never know. What we are trying to do here is to be right more often than we are wrong. Okay, we can never be 100% of the time right. Okay, forget about that. So look, to make things easier for you, because I know there are some of you guys who like to see some line crossing here, a price jumping over there. So you want to have some kind of rules, to build a quote unquote system, even though you can't build a system out of this. Okay, because this is a discretionary method of analysis. Okay, it's not a trading system. Okay, but look, what have I done here for you? Okay, look now, this the higher time frame. Okay, you see now there's this what looks like a moving average. What actually is, this is the same indicator as this one, as it is the smoothed Heikin Ashi. Okay, but I went to the coder, I just changed this line here. You see, draw line, instead of drawing color candles, I just changed to draw lines. Okay, and very easy, you can do that in meta editor. And if you don't know how to do that, just send me a PM right there at the MQL5 community market, and I will send you the indicator like this. You see, draw line, compile. Then I just changed the indicator name to Smoothed Hiking Ashi MA, for example. You see, but it's the exact same indicator. Okay, and I just used the candles have a setting of 1, which means it's a regular hiking knife. Okay, and then the The one that looks like a moving average, I'm using this value of 3. Okay, so what, how do you interpret this? How do you use this? Okay, so now what you want to do is take buys when the Heikin Ashi candle closes above the Heikin Ashi moving average. Okay, this is a trigger. Okay, oh, but how do I know if price is going to keep, above the moving average? Man, you don't. Okay, that's what I'm telling you. You are trying to be right more often than you are wrong. And if you come here and you do a historical analysis, you can see that most of the time when the candle, the Heikin Ashi candle goes above the Heikin Ashi moving average, here, the smoothed one, it tends to stay there for a while, right? Look, see, you see this leg? You see price move below the moving average, stay there for a good while. Here too, here too, here too, here too. You see, of course, you're gonna have some situations where you're gonna have that mess, right? You're gonna have up and down, up and down. Man, you know what? You can't do nothing about it. You just, this is like those range situations. You see, when we get a fresh framework forming, you see this box here, for example. Okay, usually when a minor box starts to print, like here, you see these gray ones, this is a minor, it hasn't been confirmed yet. Now if this candle crosses above this minor box, then this is going to change into the blue one. Okay, it's gonna get confirmed as a major box. Okay, but usually when a minor box starts to print, okay, the you can see that as a volatility signal. When you see that forming, you see that volatility is about to hit. For example, you see here, this one started to form, and right after that, price skyrocketed here, you see? So a volatility signal. And also, when you start to get overlapping framework like this, you have a contraction point here, you have a contraction point here, you can see usually you're gonna get a range situation on the higher time frame, and it's a range that is messy. It's a spiky range. So here it's usually where you lose money when trying to trade this mess, right there in the middle. Okay, if you are able to identify this situation here, then you want to play the range, right? You want to try to buy the low and sell the high of that range, until you get that leg expanding out of it, like this, like here, you see? So guys, you can make a rule out of this. When you get this messy situation like this, you don't trade, you just sit in your hands, you wait, wait for a confirmation of the box, or no, or try to trade it, like I said, like treat it like a range. Okay, but you can see, if you do a historical analysis, that most of the time when the candle goes above the Heikin Ashi average, it tends to stay in that direction, right? So you are going to be right more often than you are wrong. Okay, just do a historical analysis so you can like build more trust around it. Okay, we have to take a leap of faith, otherwise you never trade, right? For example, here you see this is this situation this week was like, I hate it when you have like 2-3 high impact news in the week. It fucks up everything. You just can't make sense of it. In this week there was very high impact news. You see, you were gonna to reveal it in a bit, but you see this candle here, this is abnormal behavior. This is like exception, right? It's not a rule. It's like, where do you see that behavior? It's not all the time that it happens. You see, here you have a situation, probably some news, you see, but here it happened like halfway through the move. Here you would have been very lucky if you were able to enter around here, and you were holding that position, bang, it would have been like a very nice trade. You see, it went straight to the sell side liquidity there and then reversed. So let's check here. How can you use this? Look, for example, this week here is where the news release hit the market, and you see how this shenanigans here, bullshit, it went up there, then completely reversed, hundreds of pips, then collapsed. Then 2 days later, it reversed everything. You see, this is just, it's hard to trade this and make sense of it, right? It's frustrating, yes, but there's nothing you can do because, okay, here the week start here. This was Monday, right? So if we check there, check the higher time frame, okay? You see how we got the rotation, and let's see, around here, you see there on the higher time frame already we crossed the higher time frame candles, turned to red, rotated to red, right? And now you are below that Heikin Nashi moving average. So here we have a high probability of taking sells because now we have a higher probability that our higher time frame is starting to trend. So how do we increase our chances of our trades working here when we trade in that direction, right? We want that higher time frame force to push our trades in our direction, and that only happens when the higher time frame starts to trend. And this way, it's a good way to quote unquote know, okay, because you never know, but quote unquote know that our higher time frame might be starting to trend. So look at that spot there, right? So here we could start thinking about selling the market when it goes above value. So here it barely went above value, but it went above the moving average. So here, right, yeah, you could have tried a sell here, okay, with a stop around here, because we had that order block right there, which wasn't unmitigated, right? You could have been waiting for something like this. That would be perfect, right? If you got a pick up there, that order block, and to sell there, but we didn't get that. And so, okay, you sell above value, right? But where do I sell it? So, man, you have to have an entry method, okay? For example, simple stuff like this. Okay, it went above the moving average, I'm going to sell it. That, okay, very simple. Using a indicator like the TDI here, you see when we get this peak outside the band there, which is also called the shark fin in the water. There, you see, the blue line is the water, and then you have the shark fin, that little peak. Well, we can try to sell there, okay? And I know what you're thinking. I'm going to sell every time I get a peak. No, that it doesn't work like that. It's not that easy. If you try to do that, it's going to blow up in your face, okay? Don't do that. So the next day here, not okay, we went above value, okay, but it's I don't, it's too compressed here, there's a risk of this spiking up before going down. Again, you never know. You can try, we are above value, you can try to sell here with a stop around here, you never know. Okay, then look at the higher time frame. You see, we started to get that a minor box forming there, which is a volatility signal. Volatility might be about to hit the market, okay, which it did around here on the news release, you see, which made the price collapse there. But anyways, here you see how it can be frustrating, because here the price was behaving nicely, okay, harmonically, is was moving slowly and nicely. Here again, we end above value. You see, here was a spot you could try to sell again, right? Perfect. Okay, a perfect place to sell, to build a sell position. And here, see, we had that we had the shark fin, and then back inside the band again. And you see this yellow line here is called the market baseline, or the mustard. So we had that all that action below the mustard there. You see how the white line crossed below the mustard and was doing that shenanigans there. it's a good sign that price might turn, and the market baseline, it almost touched the 68 level there, you see. It's even better when it touches or goes above it. Is a good sign of reversal. So here you would be like really happy, right? You had a cells here, you had some cells there, you're tapping yourself in the back, life is good, all right? And then, fuck, shit, you get stopped out at everything there, you see? And look, this would be a very hard place to sell again, to re-enter, because you have that volatility hitting from the news release, which, when you were live here, this would probably be like a crazy candle jumping up and down like dozens of pips per second. How do you sell this? You place a sell here, and you barely had the time to add a stop, and price is already up there. You are in the red like 30-40 pips. It's hard, very hard, even though it respected the method. We are the higher time frame is trending down, you see. And here we had that peak above value, and obviously that candle there, when it was here, it was green, right? So yeah, man, it's a very tricky situation. You would be like willing to be brave enough to anticipate that price was going to keep going down, and we did have a shark fin in the water there, you see, right on that peak. So I don't know if I don't know, depends of the size of your account and the size of the positions you're taking. If you're taking very small positions here, okay, maybe, right? Then the next day here, you didn't really have any chance. This was like early overnight. We didn't have any framework to to enter a position. If you are forcing something here, trying to rationalize, yeah, and I know that it's very easy to see that after the fact, right? In hindsight, it's always easy. It's always obvious. Oh, look, it's so easy. How come, right? I lose all my money always. Look, we had this order block, quote unquote, under block. It went there, mitigated, and collapsed. But when you are live and you have just seen this collapse like this, leaving those gaps behind, the only thing going on my mind usually, it's that price is going to just come back immediately to fill this stuff. So I hate it when there are sell or buy opportunities when you have gaps like this is so close to price, but it collapsed even further. And if we are following this method, right, that I'm explaining to you, you see in the higher time frame, the candles are red and we are below the moving average. So you wouldn't be thinking about trying to anticipate trades here, even because you see there we have crossed to below the value there on the higher time frame. You see that the value there, we crossed below. So, and the best opportunities to trade is when price is crossing to the other side of value. So we are anticipating that price will collapse and will come to the buy side liquidity here, right? So this, you wouldn't be thinking about buying here, okay, anticipating a buy. The monthly is red, but the weekly is green. So, there's some conflicting information there. And also, to be honest, I was thinking about buying this. You see, we had these supply areas here or other blocks that got penetrated, you see there. And then I was thinking maybe I'll try to buy the mitigation here, because look down there, the market baseline, the mustard, it went over below the 32 level, and this means like some imminent reversal, right? and surely enough, it did reverse. But I didn't like that we had those lows here, this liquidity like this. These are bad lows, right? Also, I was quote unquote pretty sure that market was going to come here to this order block. You see, we had this big imbalance and this order block, and price never dipped into this. So I was expecting price to dip in there and then give another shock, another change of character, at least on the 5 minutes, right, or the 1 minute, so you can try to enter. We never got that. We had more news hitting the market. You got a fake move down first, and then it completely reversed. So in here, you can't. Even though the higher time frame, the E got green there, you see, you didn't really have like some framework after that to enter here. You see, price just kept going very fast up. It didn't really it didn't even come right. For example, it didn't give you a chance to enter here, right, at that order block there. It didn't even come here to, you could have tried to buy there perhaps, but you would be buying above value, right? Here we have value, you would be buying above value, and you don't want that. You want to buy below value down here. So this is one of those times, frustrating times, where you just see everything happening. You see, you waste days and hours sitting in front of the computer watching the charts, waiting for that chance, and right when you think you got it, or right when price is about to arrive at the area of interest so you can buy a position, this happens, right? Right at the time, at the good spot to sell, you have this shitty volatile price action crazy thing going on here, and this it just ruins everything. You can't do anything, man. So if we just, let's look for more examples now. Let's look at the buy side. You see, let's look at the higher time frame there. You see, let's go back to when price was crossing above value and above the Heikin Nashi moving average. It was around here. See, price, the higher time frame rotated to green, the Heikin Nashi, and we jumped above the Heikin Nashi moving average there. See, so this, now you want to buy, right? Here we didn't have any framework. Perhaps on the 5 minutes, I don't know, you have some origin point here, and we are below value on the 5 minutes. But here on the 15 minutes at least, we are above value, but we came below the moving average, which when price on a higher time frame starts to trend, I like to enter the trades when price goes below the moving average here. Better yet, if we had a framework here and we were below value, okay? And the other thing we have going on here is like a shark fin in the water there, right? A peak outside the band and back inside the band again. Then on this day, we had a very nice opportunity, you see? We had a nice framework, you see, above value, price came below value, and this is a very nice high probability area to buy, you see? Look at the higher time frame. We have several candles now that are green. We are above the value. We are above the Heikin Nashi moving average. And here we had that shark fin in the water. You see, we came back inside. Then when price came to test those lows here, you see there that we were crossing above the mustard there already. It kind of finds support at the mustard, cross above it. So we have that divergence here, and Very simple stuff, guys. And if you ignore this, you ignore at your own risk. When you try to fight this, you're gonna get hurt. And a very recent example of that is my last video. Just watch my last video. Was around this area here that I was trying to force sells like an idiot. Why? Right? Look what was I fighting against? This. Why? And now you tell me. I know what I should do and what I shouldn't do, and I still do. Shh. My kitty, my kitty here wants attention. Hey, come here. Come here. Just gonna put her on my lap and she will stop craving for attention. Okay. So guys, do you see why was I trying to sell this, and holding the cells without stops? The only explanation is completely irrational, stupid behavior. I just needed to have taken a look at this, right? That's what I'm telling you, man. We are our worst enemies here. Like trading is like 20% technical and like 80% psychological. You're not trading against other traders here. There's no one there trying to grab your money, man. You are the one who opened the positions, right? I was the one who was selling here and not adding stops. No one was holding a gun to my head and telling me to do it, right? Anyways, I digress. Let's check more examples there. But do you see what I mean here? How you can use this and increase the probabilities of your trades working out? What does that is the higher time frame trading, my friends. So where exactly do I enter? Man, I wish I knew that. I already told you that. I wish I knew that. We don't know. You have an area, you have to try and enter, okay? And hopefully we are going to be right more often than we are wrong, okay? Do you see there on the higher time frame the minor box forming and stuff and volatility hitting the market? You see how we got some crazy price action here, volatile up, volatile down, volatile up, and then propel the market higher. You see, you have to be careful when your higher time frame starts to develop a new value, is where you have this very tricky price action, violent price action. Let's keep looking at the higher time frame. You see, this area was like a bit messy. You see, here we were crossing to below value and below the Heikin-Ashi moving average there. Then you got a peak above it. Then you went below it. But we had this to guide us. You had this framework here. You see, it had a nice origin point here. Expanded high, expanded lower, then expanded higher, then expanded lower. Very nice master pattern here, which would help you with your trading decisions. Let's come lower here. You see, there we, on the higher time frame, rotated to green. We are up on the upside of the Heikin-Ashi moving average. So here you could start, even though those candles were red, you might, I don't know, man, you have to come up with your own rules. Now the candles are red, but we are above that Heikin-Ashi moving average there, you see. So you might try to anticipate that trade, that buy. You could have bought it down here, perhaps. But if you want really high probability, then you're going to stick. You want to see that rotation there, and then after the rotation, you want to see price going below the Heikin-Ashi moving average, then you can start to thinking about selling. But you see, when price, sometimes the price will move too fast and it will not give you like a chance to enter. Like here, you didn't have any framework here. The price went up and then a bit sideways here. Okay, we were above value here, above the MA. You know, unless you were willing to risk a sell here, price just collapsed so fast. And really, the only chance you had here was that supply chain, right? When we went up there to mitigate that, you know, but is the this isn't the Forex Master Pattern, sorry, the Forex Master Pattern method anymore, right? Here you are just using order block stuff. Then here you had a nice chance, right? Look at the higher time frame there where we are above value, kind of respecting here, a nice place to sell, you see, and the higher time frame pushed the price in your favor. Let's go a little bit more in the past there. Oops. You see there, okay, we got a rotation to green here. I'm not saying this is a anticipation trade, right? Here you look where you are there on the higher time frame. You have like that very strong move down below the Heikin-Ashi moving average. Here you are jumping in front of the train, right? This is more advanced stuff, so let's skip that. So now we jumped above the Heikin-Ashi moving average and returned to green there. So here you see price was moving up too strongly. So there wasn't really framework here. The only thing we had was price went below the moving average. You know, this would be the spot to try and buy it around here. And let me check the TDI. Yeah, the TDI kind of, you see how the bands compress together? You get like that pinch of the bands and then price jump above the mustard and kind of found support at the mustard there on the other side. Perhaps there you could try a buy. Oops. Then look, a very nice opportunity here. You see there, look at the higher time frame. At that point, we had that blue box was not there, right? We had like that gray box forming, which means the volatility is about to hit. You know, we had a minor box forming on the higher time frame around here. So look, a very nice master pattern. Then we went below value. We are below the moving average. And look, very nice spot there to try to buy it. High probability spot for a buy. We went out of the band there, shark fin in the water, etc. Back inside the band. So here would be a place to try and buy it. Here you had another chance to buy too, you see, but below value, below the MA, shark fin in the water there, you see, nice place to try and buy it, and then for a nice trade, successful trade there. And here you see a spot for more advanced stuff when you're trying to anticipate the rotation. You see there on the higher time frame, we touched the value line on the higher time frame and kind of got rejected. And this little range here, you see, this range here, look at the mustard. The mustard touched the 68 level there, even went a little bit over it, and then all the price action after it was below the mustard. You see the white below the mustard. And here would have been a nice spot to try and anticipate. But again, guys, Yeah, this is advanced stuff. You know, stick to the very high probability stuff first. Okay. Let's just take a look at that down leg, and I think we are done with those examples here. You see here, you had a man when price start moving fast to the downside, you don't have like very good chances here. You see, there's not a good framework here to enter. How do you sell here, right? How do you sell here? You have to have, you know, that the higher time frame is trending strongly to the downside, and but you don't have a framework here. How do you do it? You know, you have to have other methods to entry, for entry. I don't know, you can have something like, you know, like a pitchfork. You having a line going through that price split there, which is basically the same thing as using a pitchfork like this. You know, you want to sell it, or you might want to wait for price to escape this frequency here. When price closes outside of the pitchfork, then okay, I'm going to sell here. Or you are going to sell the touch of the median line there, and you're going to put your stop around here, because if price is going to go down, it shouldn't keep respecting this, right? And it shouldn't close above at the, it shouldn't move to the upper channel here, right? The upper half of this channel here. It gave you a chance to enter like early overnight here, right? At early overnight, look, a good spot. Even though you see, you would have to be careful there, because you see on the higher time frame we had hit the buy side liquidity, and there's a high chance of reversal, or at least some form of reversal, right? Above value, above the moving average. Look at where you are there. You would try to sell. And guys, this is a way you can look at this to enter high probability trades, okay? So let me just show you here on a completely different market, like on the crude oil. I did the same thing, okay? Just to show you that this is sane and sound, and this is supposed to work in any market, okay? Look, let's look at the this up leg here, right? Where it started. Bear with me. Okay, so here was that place, remember, where the internet went out and was trying to force sells and sells. Look, I just needed to have taken a look at this. Do you see how the higher time frame rotated to green, green, green? We are above the high Kinachi moving average there. You see, we have that minor box forming there, you see. So we have volatility about to hit the market, and if the higher time frame is green, right, and even the weekly was green, so the higher odds is that the volatility is going to hit to the upside, right? So why was I trying to sell here so badly, right? Like a fool. Anyways, you see, I actually should have been trying to buy there, you see? Opportunities to buy here, below value, below the moving average, the shark fin in the water to the downside there, you see? You buy. So why was I trying to sell, right? Stupid. Here, another opportunity, you see, below value, shark fin in the water, inside the band again, you buy. Now, this is where this is the dilemma, right? Okay, let's suppose you build a position here. Okay, so you are shooting for the value line or higher, right? I at least I am. So the problem is that price is not going to skyrocket all the times, right? So here in this example, if you hadn't taken some profits here, you would have gotten stopped out at everything here, right? So this is like a winner that turned into a loser if you didn't take any profits here. So that's why I like to build a position out of several small positions. Then you close, at least you close half there or 70%. I don't know. And you have to leave the rest to run, right? So here you had a rotation to red there on the higher time frame. So you wouldn't be thinking about buying anymore, perhaps anticipating a sell, right? Now there you crossed to the upside again, rotated to green again and crossed to above the Heikin Nashi moving average. You see now it gave you a nice opportunity to buy here. You see created framework, went below value, peaking below the moving average there, outside the band. Here it didn't give you like that shark fin, but you see how you could have timed the entry using this indicator here. See when it closed back inside the band. Okay, so perhaps this move is over now and I can start thinking about buying. So here would have been again a very nice buy. And the exact same problem with, building a position and then holding everything, in hopes that price will keep going up. And if you didn't close a part of your position up there, you would have gotten stopped out for sure here, right? So but the buys were still valid here. You see there, even though that candle was red, we were still above the Heikin Nashi moving average there. So when you have a sequence of green bars there, green candles on the higher time frame, and when you get your first red, if the market looks like it's trending up strongly, you can try and anticipate a rotation back to green. That's the only case, but when you have several candles already, then it is a higher risk, right? So here you see how the higher time frame was trending up, you bought below value and it pushed the market higher in your favor. So you see, man, you always have to be trading with your higher time frame, never against it, and I know it's easier said than done, and you can see that in my last video. Why was I trying to sell against this, right? It's stupid, guys. It's not a technical problem, it's a psychological problem. Let's see just a couple more examples here and then that's it. Let's just take a look at that down leg and then that up leg, and I think we're good. You see here, they're on a higher time frame. We are red candles and we are below the moving average, right? The Heikin Nashi moving average. So we want to sell above value. So you see, above value, if you sold it, profit. Above value, sold it, profit. See, above value, above the moving average, pushing down. You see how the higher time frame pushes your trades in the right direction, the direction that you want. If you have ever wondered why your trades are aren't working out, it's because you are trading against the higher time frame. Simple as that. You see here that just that one candle that turned green there, we are trending down, we are below the moving average, and this is that spot that it was just like a small retracement on the trend, right? And here is that spot where you can try the anticipation trade that price will continue the downtrend. You see here, guys, above value, even peaked above the moving average there, and then bang, down it goes. Here, not very good framework to work with. Here was the high there. You see crazy volatile price action to the high there. This is more advanced stuff, but I'm going to skip it. But you see here, let me remember what I told you about the mustard going above the 68. You see mustard went above the 68 level, imminent reversal ahead, and that's what happened, right? Price collapsed. Let's just take a look at that up leg now. You see, now that we are trending up on a higher time frame, you see how nice we do. You see again on the higher time frame, we have that minor box forming right there. You see a volatility signal, price skyrocketed there. So when price turned to green and moved above the Heikin Nashi moving average, you start to look to buy below value, right? Here, framework, below value here. You see out the band, in the band, shark fin in the water there. Up it goes. Here, not a very good framework to work with, but it did create one. We went below value there, and you have some shark fin. You have a shark fin in the water there, right? So this one almost, and you have to jump in, man. You have to trust it. Here, a nice one, right? Nice master pattern rotation around this origin point here. Went below value, gave you a chance to enter around here. Here, another one. You see, below value, you buy, up it goes. Here again, below value, up it goes. Until where did it reverse, right? Right at the, oops, right at the value line on a higher time frame there. You see that origin point there. See, it reversed one time. Now it's getting there again. And this is where I built a position this week. I have built, I mean, at the moment, it looked like a good idea, you know, but in hindsight, I kind of regretted now doing that. I have a sell position built in here, around here. I have a sell position built around here, and it looks like I'm probably gonna get stopped out. And you see, setting against that. But the only reason I'm doing that, it's because you see here on the TDI, the mustard went above the 68 there, so we have an imminent reversal ahead. And if I get lucky now today, which is Sunday, I have to keep an eye when the market opens here. Will it gap down? Will it keep moving a little bit more up here? You know, perhaps it's going to stop me out, and I have to keep an eye here. This gray stripe here, it's an order block to the left that's being mitigated right now. So perhaps we want to see some kind of a chalk, right? We want to see this guy here getting broken, right? Just an example. You want to see this guy here getting broken, and then a retest of something, mitigate something here. Then if I get stopped out and you start getting more clues of a reversal, try to sell again, right? I know, I quote unquote know, right, that it's about to have some kind of reversal. We don't know if it's going to reverse all the way back down there or if it's just going to be a small retracement on the uptrend. But yeah, I am well aware of that. So I shouldn't be like married to this sell idea, you know, and trying to force, setting against that strength there. You have to give up, you know. We have a very recent example in the last video of what happens when you do that. Right? And guys, the other market that I had a position on is the gold. Kind of a similar situation, you know. The only reason I have like a sell position built around here, and probably gonna get stopped out. Wait a minute. I have a sell position around here with the stops up here, and maybe I'm gonna get stopped out. I don't know if I get lucky. And when Sunday, when the market opens on Sunday today, maybe it's going to start to go down. If I'm lucky, I don't know. Probably not. But the same situation, we want to see some sort of, you know, shock, right? And then, but the only reason I am trying to anticipate a rotation here, it's because this too, you see how the mustard went above the 68 level there, and even more. Man, to be honest, I have never seen this before. This is the first time I see this like this. If there was like a prize for the most overbought condition ever on the TDI, this would take the gold medal. I never seen something like this. You see, it never seen something like this, and it's starting to pinch now there. You see the band, so I am guessing perhaps a massive reversal there to the downside, and I want to grab it, right? And hopefully, if I go to the 30 minutes here, you see we have this origin point here, expand high, expand low, expand higher, expand lower, expand higher, and hopefully if I am right enough and if I am lucky, then price is going to make a bigger leg to the downside here. So I want to be in that, I want to ride that, right? Hopefully, let's see. But that's it, guys. This week there wasn't really good opportunities, you know. Natural gas, nothing natural gas. I mean, there was a buy opportunity here. You see there the higher time frame started to trend up, rotated to green. So here value below the MA here would be nice spots to buy. You see here too, when below value here, shark fin in the water, out the band, inside the band again. Nice place to buy. Higher time frame pushes your trade up, but I didn't trade here. I was just keeping track of it. The Nasdaq was like some crazy bullshit price action too. Here on Monday, price just collapsed, then more volatility, you know. But you see, respecting, even though very hard to enter here, because you know, right at the moments, right at the good spots to enter, you had the volatility hitting the market and crazy price action, so hard to enter, right? You see there on a higher time frame, when it crosses below the value here, here like is the best spot to try and sell, but it didn't give you like a good framework. But here you had some good framework, went above value, above the MA, shark fin in the water there. But you know, how do you sell after this big ass 30-minute candles with a lot of buying pressure, right? So it's hard. Not very good look. And soybean, very nice buy opportunities here. But since I have never traded soybean before, I'm just like keeping track of it as well, just looking at it. I'm trying to make sense of the sentiment numbers too, because I have one site that is giving me a neutral reading for the sentiment, and I have another site that is giving me this the majority of people are long, you see, more than 80% of the people are long in soybeans, but you look how the price is going very strongly up there, like a vertical column there, going up very strongly. So I I need like a month or 2 months to make sense of this. Maybe I can't use the sentiment as a contrarian indicator here in this market. I don't know. I never traded it before. But if we ignore all those numbers here, right, the sentiment, and just look at the higher time frame, for example, higher time frame turned to green there, right? So here we went below value, below the MA there, you see, and a shark fin in the water. You buy around there, push the price higher. Here we didn't have any framework. Perhaps on the 15 minutes has some framework, but let's check it out. Yeah, you see, framework went below value, below the MA, shark fin in the water. Good place to buy there. And here, that same situation, you have to, if you don't take profits above value, if you don't take partials, you're gonna get stopped out on the rest of your position. But here it gave you a chance to buy again, right? Look at the higher time frames, still going up. We are above value there. We are below value here. Shark fin in the water there. A nice spot to try and buy again. And surely enough, the higher time frame pushed price higher, like you see. And the Bitcoin, let's see the Bitcoin, the same thing. Look, I am also trying to make sense of the Bitcoin, the sentiment values, because the sentiment values on the Bitcoin are giving me this negative bias, quote unquote negative bias for this market, because it's telling me that the majority of the people are long, but price is going up very strongly. It was supposed to be the opposite. So I don't know if the sentiment information is useful here for Bitcoin, or perhaps you can go with the majority. For example, in soybean, perhaps the majority is correct, and perhaps the majority is correct here on Bitcoin. Or we need at least a month or two to make sense of these numbers and see if they are really useful or not. So if they are meaningless, it's better to just stop looking at sentiment and focus solely on the method, because you really don't need to know the sentiment. It's just like a cherry on the cake, but you can't don't get swayed by those numbers. That's what I say. Just the primary focus is the concept here, right? The master pattern and the higher time frame training. That's the main thing you should look at. And look there, the higher time frame rotated to green, right? And we are moving above value. Here you could have bought below value there, you see, framework. And here since the price was moving up too fast, you know, it didn't really give you a good framework to buy around here. So the only real opportunity was around here. And here you would be like trying an anticipation trade, anticipating the rotation. So one wasn't for you. And here you can see that price was trending down there, and we went above value with the shark fin in the water there. But I'm pretty sure that that candle there on the higher time frame was green here. So it's that case where you had, it's that case where it's the first green candle after lots of red candles. So you can try and anticipate that rotation back to red, right? Here the same thing there. You see red, 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 and just here was that green, single green candle. Okay, so you could have tried, we are above value here, you could have above the MA, you could have tried a sell here. You see how it was like mitigating something around there, and we are above value here. You see, you can look at this at like as a major line here if you want to, like this. Here above value there. Here was like a very nice opportunity. See there, trending down on the higher time frame and went above value. Shark fin in the water. Nice spot to sell here. It went right for the little gap up there. You see there? There's a gap there. It's where it mitigated that gap and then came down. Okay, guys, that's it for this week. I hope you guys have a nice week, trading week, and we see each other in the next video, okay?